But thank you so much everyone for joining today. We're really delighted to have you all here, and thank you very much to our investors as well. At Good Finance, we're really pleased to be co-hosting this event with our Addressing Imbalance partner Hatch, and I'll introduce Cecilia in just a second, but I guess it'd be useful to understand a little bit more about why we're running this event. At Good Finance, we seek to be the trusted source of information for charities and social enterprises on social investment. We are part funded by Big Society Capital, part funded by Access, the Foundation for Social Investment, and we are very much a user-led platform. So for all the tools, the resources that we develop are all very much developed in partnership with our users, and we get user feedback along the way. Some of you may be aware of the Addressing Imbalance programme that we also run, which very much came out of the realisation that communities from underrepresented backgrounds face disproportionate barriers to accessing social investment. And we really wanted to address that and learn from communities, learn from groups who may have found it more difficult in the past to access investment, and understand what role we can play in helping to make that space a little bit more accessible. Hatch are one of our partners in this programme, and we feel it's really important to work with them because they are so aligned with this mission. So I just wanted to introduce Cecilia to talk a little bit more about Hatch.
Thank you so much, Olivia. Welcome everyone. We're really excited to be able to be co-hosting this event with our partners. Just a little bit about Hatch and about myself. I'm Cecilia. I'm the community manager at Hatch, and my role is basically making sure that our community of founders remains engaged with each other and with other opportunities that exist at the different stages of their journey. A little bit more about Hatch. Our main aim is to empower underrepresented entrepreneurs to imagine, launch, and grow sustainable and impactful businesses. And we do this through tailored support through our community and through our partnerships, such as this one with Good Finance. Since 2013, we've supported over 5,000 entrepreneurs, and we do this through our cohort-based programs that are from Launchpad, Incubator, and Accelerator level, our free events, and our one-on-one support. I will leave the link to our website here if you want to visit it and get more information as well. So we're just super excited about this partnership event that we're able to co-host today.
Thanks, Cecilia. And the event today, we understand that social investment is quite a difficult space to navigate. There's so many investors, there's so many different types of investment. It can be really difficult sometimes to understand where to go and kind of where to find information. So Ask the Investor is really much about learning about just some of the different types of social investment that are available and being able to ask questions directly to the investors. I will in a second introduce you to my colleague Annie, who will talk through a little bit about an intro to social investment, and then following that we're going to hear from 3 different social investors today. So we've got Tanya from Unlimited, we've got Jason from Crowdfunder, and we've got Twin and possibly Diana as well from Triodos Bank, who will all be talking a little bit about some of the different types of social investment available and what their organisations do, and then there'll be plenty of time for Q&A. Thank you very much to anyone who's already submitted your questions in advance. We'll be putting those questions to the investors and getting through as many of them as we can today. We also will have time. We do really welcome anyone who wants to come off mute at the end during the Q&A and ask their questions, or just raise your virtual hand, and we really welcome any discussion or any questions that you've got today. We would ask that during the presentation, if you do have questions, just pop them in the chat and we will try and get through to them during the Q&A session. But without further ado, I'm just going to introduce you to my colleague Annie, who will be talking through a little bit of an introduction to social investment.
Brilliant. Thank you, Olivia. Hopefully everyone can hear me. It's asking me to unmute myself, but Zoom is still an enigma for me at times. I'm assuming you can hear me because no one's waving and saying you're on mute, so that is a good start. I think Rosie will just be sharing some slides for me, so we'll wait for those to come up. Brilliant. And just before we start, I'm quite new to public speaking and presenting, and I do have a bit of a tendency to talk very quickly. So if that starts happening, please do pop it in the chat, and Olivia, I'm sure, will be more than happy to come off mute and shout at me to slow down or repeat myself if anything needs repeating. So before we get into it, I just wanted to introduce myself. I'm Annie. I'm the Senior Digital Marketing and Communications Officer at Good Finance. And I've been working at Good Finance since January 2021, so coming up to 2 years now, and was completely new to the social investment sector. So since then, it's been go, go, go. Hopefully most of you have heard of Good Finance by this point, and I'm sure many of you have kind of come to this session via our platform. But just to kind of reiterate, Good Finance is a collaborative project with the aim to help improve access to information on social investment for charities and social enterprises. So our overall mission is to be the single trusted source of information on social investment for them. How we achieve this, we aim to improve knowledge on social investment, what it is, how it can be used, and crucially, the journey and the process that it requires. We hope to enable organisations to make quite informed decisions based on their own circumstances, needs and situation, rather than any embedded attitudes. And finally, we aim to help connect organisations to the right investors to talk to based on shared values, essentially, and what's right for them. How we do this and kind of hold ourselves to account to stay true to our mission is kind of twofold. So we've got the website, which helps to inform and educate, has lots of tools and resources, and essentially lots of information that you can go away and click through and digest what kind of Olivia mentioned is a very complex topic, to hopefully kind of break down some of those access issues. And then we also have the project, which is engagement activity. So it's events like this, it's our Let's Talk Good Finance event series, workshops, case studies, videos, and any other kind of digital marketing activity that we embark upon. And as Olivia kind of mentioned earlier, the most important thing to remember is that first and foremost, we are user-led at Good Finance, and everything we do, we kind of put the users at the centre and put them forefront of what we're trying to achieve. Thank you. Okay, so in terms of the role of social investment, we like to say it doesn't matter if you're in the Highlands of Scotland or at the very end of Cornwall. I think I'm going to say Land's End, but apologies if that's not correct. Social investment has a role to play in tackling issues across the UK. So we know that now more than ever, particularly in the current economic circumstances, social enterprises and charities oops, sorry, if we just go back again, Rosie, thank you. Social enterprises and charities are dealing with some of the most challenging issues in the UK. It goes into a few examples there, but key ones, I suppose, at the moment include housing, income and financial inclusion. As it states there, social investment is the use of repayable finance to help an organisation to achieve a social purpose. So what's really important to remember, I think, is that social investment is not sort of an entity in itself. It's more of a tool to help you to achieve the impact that your organisation is trying to create. Moving on to a bit of history 101, we have the financial crisis of 2008 and 2011, and what we've kind of had is I don't want to use the term perfect storm, but a kind of compound of issues, including austerity, less income, the public sector actually moving away from contracts because of that austerity. And then on top of that, you have a little something that happened in 2020 in the global pandemic. So I think in the past few years, a lot of organisations have had to look at the way they provide their services and how they are resilient in the face of uncertainty. And social investment is just one of those ways that they can I guess, lean on to become more resilient in the face of adversity. And so what did that mean? Set against the background of increasing demand, so particularly for frontline organisations, their services increasing in demand, people wanting to use what they provide, across the backdrop of uncertainty and particularly all the uncertainty around the global pandemic. Organisations have had to take a good look at the resilience and their sustainability, their income generation and revenue models, and as a result of that, the funding and finance required to support their organisation. And so social investment naturally comes into that third and final part in terms of the financing of their organisation. So how does social investment work? Put very simply, it's charities and social enterprises that generate a surplus through trading activities, contracts, grants and donations, or crucially, a combination of all or some of these aspects. And that profit or surplus is then used to repay investors. I could kind of talk about what social investment is for hours. It's very complex topic, but thankfully for everyone here and myself, we have a handy animation explainer that kind of explains it better than I ever could. So here we go.
Across the UK, charities and social enterprises like yours are tackling some of society's biggest problems. Maybe you've set up a coffee business to give people the skills to get back into work, or are running a nursery and using the profits to support local parents. Whatever your mission, you'll need money to help with cash flow, to grow your organisation, or to buy an asset like a new building. You might even need finance to kick-start your new venture, and that money could come from traditional grants or donations, or as a loan from your local bank. One option is to get that money from a social investor. That social investor could be an organisation or an individual, and you can borrow their money or offer them shares in your organisation. But what makes a social investor different? Well, they don't just want to see a return on their investment. They want to see their money being used for good, helping you to keep delivering your social mission. Sound good? To see if it's right for you, check out goodfinance.org.uk.
Thanks, Rosie. A great little kind of animation explainer, and just a plug, I suppose we do have a couple of those on our YouTube and on our website. A great one on cost of capital and also measuring social impact. So I can provide the links for those after this as well. So in terms of your financial toolkit, it's really important to think about all of these aspects and opportunities together rather than just one or another. So for example, you could look at donations and fundraising, borrowing from a bank, delivering on contracts and social investment, and all of these would support some kind of trading activity for your organisation. What's really key to remember is that social investment is not a replacement for grants. Rather, they sit alongside each other as tools in a kind of collective financial toolkit, if you will. Okay, so key considerations. So perhaps you're thinking about social investment, you're exploring whether it's right for you, or you could be even further down the line. But there's 3 steps or considerations that we usually advise organisations to think about before they get started. So the first of that is purpose. What do you need the money for? We often talk about these 4 points listed below, I guess the 4 pillars of purpose, if you will. So do you want to use the money to buy an asset? Do you need the money to maintain cash flow? I get that one's particularly relevant for if you've got an outcomes-based contract or a payments by results contract. Do you want to kickstart your business? So we purposely avoid the term startup here. Never say never, but as a general rule, social investment is not as suitable for startups as perhaps organisations that have already done their proof of concept. And then finally, you've got growth and innovation. So you kind of got your idea, you've got your proof of concept, and you're looking to ramp up and scale the delivery of your organisation to ultimately deliver more impact. Number 2, how are you going to pay that? Oh, sorry, Rosie, I'm going through one by one. How are you going to pay it back? Is there an income stream with surplus? So this could come from a range of things, including government contracts, rental income, membership fees, and even some donations or fundraising activity. Social investors will consider that as part of your kind of overall trading income. And importantly, number 3, what social impact will your organisation create? And this is perhaps what differentiates social investors from grant providers. So they really they're not going to give you kind of outcomes that you must meet, but they're really interested in what you are trying to achieve with the impact you create. Who's going to benefit, what outcomes you'll create, and put very simply, what difference the money will make. Thanks, Rosie. Okay, so moving on to the different types of social investment, and you'll have to bear with me, this is a bit of a meaty one. So what sometimes happens with, I guess, leaders within social enterprises and charities is that they're so passionate about making a difference and making a difference quickly that they want to get from A to Z as quickly as possible. So that's A being, yes, perhaps social investment is something we would like to explore, to Z being like, okay, we need to borrow some money now, who can lend it to me? But there's actually quite a lot of work that you need to do in the middle. You need to think about what type of money and what kind of financial product is best suited to your organisation. And then you can work out which investor you might want to speak to. So our director, Mel, will often say you have to kiss quite a lot of social investment frogs before you find your social investment prince. And that is to say you don't need to go with the first kind of organisation that you find that you think might work for you in terms of what they're offering. There could be lots of options out there. And depending on your own circumstances, it's really important to explore each and every one so you know that you're getting a deal that works best for you. Put very simply, you can divide these into two pieces. So one being debt or loan finance and the other being equity or shares. Some social enterprises and charities are actually unable to give away equity, but getting social investment. So specialist social investment firms or social banks, for example, so that's from an organisation, or there's borrowing from individuals, which might look a bit more like crowdfunding or community shares or social investment tax relief. In terms of types of social investment, there is a lot more information on the Good Finance website, so I do recommend checking that out after this as well. So moving on to the next one, we've got who are the funders. So if you look at the sliding scale towards the bottom, on the right-hand side, you've got traditional investment through high street banks. So they're very concerned about getting their money back, and it's a bit more of a financial proposition more than anything else. On the left-hand side, it's philanthropic money, so from perhaps grant-making institutions, and they're not expecting their capital back. They're looking for social returns, so the outcomes which the money will be able to create. Social investment sits somewhere in the middle, so it needs to get its money back with interest, so it can then be recycled and lent to other organisations to make change. But a social investor really cares about the difference that the money is making. And so finally, rounding up with a bit of additional support, I mentioned the Good Finance website, so I will just spend a moment or two plugging that here. We've got lots and lots of resources from kind of cost of capital, what it is, and an interactive calculator that you can use to kind of explore the interest rates involved with social investment. We've got a fund mapper tool, which lists over 150 social investors and advisors, and allows you to filter your search through kind of social issue you're trying to tackle, the location you're operating in, how much you'd like to borrow, etc., etc. So that's a really good way, kind of when you're at the process of looking for social investment. We've got an Is It Right For Us tool, which essentially is if you're at the very start of your journey and exploring social finance as a means to diversify your income. It takes just 2 to 3 minutes and will give you the answers you need to kind of, if it's yes, you'll be taken to where you can look for social investment and what you need to do beforehand, or if it's no, it's how you might be able to prepare yourself to become a bit more kind of ready to take on that social investment. And finally, we have just launched a pre-investment support hub. So this is targeted at organisations that are kind of perhaps a little bit smaller or just getting started, or have still got a few kinks to work out in terms of their trading revenue, but are looking at other ways that they can ready themselves for social investment. So this hub has business support, financial management support, marketing and communications support, fundraising, you know, organisations that offer grants ahead of social investment, that kind of thing, and that's well worth exploring as well if you get a moment. Next, we've got the Reach Fund. So that is offered by our sister organisation Access, as Olivia mentioned earlier, our part funders. What that is essentially is a grant to help you become investment ready. And, you know, you might use the money to get a professional to help with your business plan, or kind of some support in staffing and financial management. So that money is money you can use ahead of applying for social investment. And then finally, we've popped in here Social Investment Business with their recovery loan scheme. As I mentioned, there's so many fantastic social investment organisations out there. So do, you know, check out the fund mapper and explore what's available to you, so you can find the one that works best for you. And I think that was all from me so far. So thank you very much for listening, and do pop any questions on the chat. Thank you.
Thanks very much, Annie. And just to flag as well, any of the links that we've shared in the chat or any of the resources that Annie mentioned, we will share as well in the post-event email. So I will pass on now to Tanya from Unlimited to talk a little bit more about the Growth Impact Fund.
Great, thanks so much. And thank you to Annie as well. I mean, I was smiling throughout your presentation because I do spend a lot of time as well looking through the new resources that come up on good finance. I can really, it's great to always see what you're developing, and it's something that we've seen our entrepreneurs really benefit from and to have that support. So I'm really excited to be here and to be part of today's panel. Just to introduce myself briefly, my name is Tanya and I work at Unlimited as a portfolio manager. I'll start off just sharing a little bit about what brought me to the Growth Impact Fund before I move into other bits today. So my background really is as a social entrepreneur. So it's really exciting to be working on the Growth Impact Fund because it works on funding social entrepreneurs that are really working on tackling inequality. The Growth Impact Fund is delivered by Unlimited in partnership with The Big Issue and Shift. And so I'm here on behalf of Unlimited. My background in social entrepreneurship really focused on vulnerable communities, access to sustainable employment for women coming out of forced prostitution and trafficking and abuse, as well as here in the UK working with migrant communities on financial inclusion and education. So a bit of a mixed background, but really excited because now being able to share some of that experience, having worked as an entrepreneur for over 10 years, being able to support ventures that are looking to grow and looking to stay really active in the social impact aspect of their work and to grow that into more impactful work in the future. So coming to Unlimited, we can move to the next slide, is really exciting because we do focus on journeying with social entrepreneurs. So we've got a very ambitious 2025 goal for social entrepreneurs. And if you've heard of Unlimited before, you might be familiar with our work with social entrepreneurs, a lot of early stage social entrepreneurs as well. But something that is really exciting in the journey ever since Unlimited started in 2002, this commitment to putting social entrepreneurs at the center and being able to journey with entrepreneurs in their process. So we've really historically been working on early stage grants. A lot of entrepreneurs have gotten their start with an Unlimited grant, something early on in their entrepreneurship career that just gave them the confidence to say, okay, I can start this business, or I can build this business, I can try out this idea and move into working on that even more. And so this idea of being able to journey through entrepreneurs has brought Unlimited from that early stage grant process to starting to explore social investment. And this is something that we started about 5 years ago on a smaller scale. With the Thrive Fund and the Impact Fund, where there are ventures that are currently in our Unlimited portfolio. And alongside, working on that, we also did our research and kept listening to the community, listening to entrepreneurs to hear about, as we grow with entrepreneurs, we see what challenges they face, and going from grants towards investment, there's a lot of barriers that people have been experiencing. And so research that we did showed us some of those barriers that were coming up and key insights, which eventually have led to being able to start the Growth Impact Fund. I'll share just about 3 key challenges that you'll see we try to address with the fund that we saw in the research with working with social entrepreneurs and asking them about their experiences with social investment. So 3 key challenges. First, we saw a gap in patient and flexible capital. Second, there was limited funding for entrepreneurs coming from underrepresented backgrounds or diverse backgrounds or with lived experience. And third, at the time of the research during COVID-19, we were seeing a disproportionate impact on specific communities, whether it be because of specific background or different sectors, or also even places that people were living in. And we could see that potentially, those gaps would widen as time goes on. And from those 3, really starting to gain more insights from entrepreneurs, what has to change in the social investment space, and what can we do as Unlimited, having journeyed with entrepreneurs, to work in the space to change the landscape a little bit and to address some of the challenges that we see. So I'll talk about the Growth Impact Fund now, and you'll see a little bit about how those things connect. So we can move to the next bit here. The Growth Impact Fund is an early stage, is a social investment fund. And we're providing investment for early stage growing social businesses. And our investment is made for organizations that are led by diverse leaders and teams. They're looking to grow their trading income. They're looking to help tackle inequality. So something specific that we focus on is really supporting organizations that address inequality in the UK and that have a diverse representation at board and leadership level. But we also take into consideration solo founders and other teams that are really committed to bringing diversity to the forefront of their work as well. So those are a few things when you're looking at potential funds and investors, really starting to see where the focus lies. So for the Growth Impact Fund, it's very much about inequality in the UK and supporting diverse founders and teams. On to the next slide here. So what do we offer in terms of the Growth Impact Fund? As I mentioned earlier, there are different types of investment. And for this specific fund, we're really focused on diversifying this patient capital and not having just a one-size-fits-all answer to social investment needs. So in terms of the types of investments that we offer, we have equity, we have debt, we have revenue participation agreements. And those are the three types, but even within each type and each investment, it's really bespoke and custom made to the venture, to the team, to the goals of the enterprise that we're working with. The size of what is RPA in the chat, our revenue participation agreement. And I can chat a little bit more about that as well in the question in the Q&A, but it's when we invest in a company, but instead of just paying back a certain amount over a specific period of time, we would also, there's a commitment to take a percentage of the investment, the percentage of the revenue coming out of the year. So depending on the type of venture that you are, there'll be a different setup for how this is done. And we can talk more about this later, but these are the three types: equity, debt, revenue participation. And what we're finding actually is that a lot of people looking for investment come and have initial sort of type of investment that they want based on what they've heard from other places. And when we start talking about revenue participation, which is really great for those that don't yet know what kind of outcomes they're going to have over the first couple of years, want a bit more flexibility. This is something that a lot of entrepreneurs are actually quite open to. The size of the investment are from 50,000 to 1.5 million of social investment, depending again on the type of business that you have and what your goals are for growth. Something that's different from our process is that there's no formal application, but there is an expression of interest form on the website, which is currently paused, but you can reach out to us if you feel very strongly about the venture that you're working on or your venture. And this is so that we can bring in people that might not feel that they're ready to make an application, or if they've come across barriers with other investors where the investment process is so lengthy in the first part, and you get through so many hoops and ladders before you actually get to the point of talking to someone. And so here we're consistently trying to design the process around the experience of entrepreneurs. So there's no formal application, but you do express interest on the website. Then there'll be an initial conversation with someone on the team, and then we can bring you through this process that allows us to meet you where you are. It is 3 to 4 months on average. So if you are looking for investment right now and need the money right now, I would say that this might not be the space to get that specific funding. And as it is with many other investors, that it does take time to go through the process. But there is a lot of accessibility and inclusion that we take into account in this process. So making sure that we can meet entrepreneurs where you are and provide the support you need to understand how to get through the process. On to the next slide here. Something different again that we're offering with this fund is support alongside investment. So there's pre-investment and there's post-investment. The pre-investment side would be separate from the actual investments made into companies, but the pre-investment side is up to 15,000 for some organizations. So if we find that you're a venture and you are quite close to being investment ready, but not quite there yet, and need a bit of support, say with just building out your financial model or understanding a specific part of the market so that you can tailor your product or your service to meet those needs, this is something that would be ideal for you. This covers working with consultants. It also covers personal costs or care costs, backfilling roles. And that's really exciting to be able to provide for different entrepreneurs. Post-investment, you get a dedicated portfolio manager and post-investment support as well. So again, with these, just like the investment itself, these are bespoke and custom made to the venture. And lastly, for the social investment sector, we want to be continuously learning and sharing that learning with others, as we want to be making changes in the sector, not just with the ventures that we work with and not just in our investees. So there's always going to be things that we share, including reports and knowledge sharing with other funders and people in the sector. We also have a diversity, equality, and inclusion toolkit. It's a free tool to support social enterprises with their DEI aims and measurement, and you can reach out to us about that as well. And I'll wrap up about here because I know there'll be a number of questions that we can move into later, but feel free to reach out to me. You can move to the next slide. My contact details are here for the Growth Impact Fund. And I'll hand it back to Olivia. Thank you.
Thanks very much, Tanya. I can see some questions coming through in the chat, so I'll make a note of those and I will pick up those in the Q&A session. But moving on, Rosie, if you can stop sharing your screen, we will move on now to Jason, who will explain a little bit more about the work of Crowdfunder.
Great, thank you. Hi everyone, I've got a few slides to share as well, so I'll just do that, hopefully. There we go. So a little bit about Crowdfunder. Crowdfunder is, hopefully you know, as a crowdfunding platform. We work with thousands of people looking to raise money for their causes, and that could be as an individual, it could be as a charity, as a social enterprise, as a business, etc. We work with a really wide range of people and organizations looking to raise money. We also work with a range of match funding partners as well. So we've got match funding available from people like Aviva through their community fund, and currently with M&S to support charities and social enterprises who might be wanting to install renewable energy and cut their energy bills. And we work widely with people like Sport England, who will match fund crowdfunding campaigns being run by sports clubs and charities as well. So if you are a charity or social enterprise, do have a look at the match funding that we've got available. We, as I say, are a crowdfunding platform. We help mainly, we'll focus on social enterprise and how we work in the social investment space. The first way we do that is through supporting people to run a rewards-based crowdfunding campaign. What does that mean? That's about offering something back for the money that people give you. And in terms of social enterprises, that could be the goods or services that the organisation is going to be providing. So it's a great way, particularly for early stage businesses. You can test out the market, prove your business plan through actually doing some crowdfunding and get people buying the goods or services that you're going to be producing. And rewards are a really great way to attract people at different price points. So you can offer lower value rewards and then some higher value rewards as well. That might be more attractive to, say, business partners or corporate partners or suppliers, things like that. We'll look at an example of a rewards-based campaign. This is an organisation called Spiral Freerun. They're a CIC. They do parkour training, free running training in Bedford. They wanted to raise £30,000 to move to a larger warehouse premises and to fit out those premises to keep their business growing. You'll see they raised £30,000 from 140 supporters, and that included one of our partner organisations who pledged £10,000. And if you look at the type of resources, hopefully you can see that across the bottom. What you see is they offered a mix of things. So some of those were related to their business itself. You could get t-shirts or a month's membership or a package of stuff for 250 quid. But also they came from other people in their community, their business community. So whether that's through friends, family, suppliers, etc. So for £5 you could get a bag of fudge made by somebody locally. So rewards are a really great way to show that you've got support, not just from your customers, but from the wider community as well. In terms of raising more significant sums of finance, then we're also one of the platforms available to run a community share issue. So we've currently got a number of share issues live at the moment, from a bookshop looking to raise, I think, £180,000 to a group called the Music Venues Trust, who are looking to raise £3.5 million to buy music venues that are at risk and turn them into community-owned assets. So these are some screenshots from our page on Community Shares, which we'll share with you after the session, so you can look at the different ones that are live and what people who've done it previously. But you can see we've worked with a wide range of organisations. Positive News is a publication. They produce positive news stories, have a magazine they produce, and also online. The swimming pool there, community shop, Comedia Bath, a comedy venue. So loads of different examples of types of organisations that have used community shares. What are community shares? They're a little bit different to the ordinary shares you might have come across, shares that are traded on the stock market. So somebody buying community shares, they are an asset. They do give ownership rights. You can give returns, so you pay interest as a company. You will pay interest back to your investors on those shares. And shares can be withdrawn, but they can't be sold like you would sell shares on the stock market. Generally, they can be withdrawn, so that in effect the issuing organisation buys them back from you, and they also don't rise in value. So traditionally, if you invest in shares, you expect the value of your investment hopefully to go up over time. The value of your shares won't increase if you own community shares. Financial returns are often capped. They are quite low. A financial return shouldn't be the key driver for people to invest through community shares. It should be more about the social return and the community aspect of shares and people believing in what we want to do. And they're also one member, one vote. So usually societies will limit the amount of shares what a particular individual can buy, but irrespective of that, someone who's got £50,000 in shares would have the same votes as someone who's got £50 worth of shares when it comes to the AGM and decision making. Community shares are also known as withdrawable, non-transferable share capital. To run a community share issue, you do need a few things. You're going to need a team of people, hopefully, to help you. You're going to need the right legal structure as well. So community shares can only be issued by cooperatives or CBSs, which is a community benefit society. So there are particular forms of legal structure that can issue this kind of capital. You need to produce a share offer document that sets out how you plan to spend the money, and that's going to be in a way which is going to align with the crowd of people who hopefully are going to invest in what you're doing. Running a share issue, you take on shareholders. So obviously there's a group of people that you've got to be ready to administrate the group of shareholders, and also to involve them in decision making going forwards. And lastly, you're going to need a good marketing plan. As with any form of crowdfunding, community shares is a form of crowdfunding. You're going out asking if lots of people will invest in what you're doing. Marketing is really crucial to doing that, and understanding who your potential investors are and how to reach them through marketing is really important. Typically, people will be investing between around £400 or £500 individually in a share issue. On crowdfunder, the average pledge against a rewards-based crowdfunding campaign is £50. It's a lot higher in a community share issue. You will get some individuals who'll put in significantly more, and you'll get sometimes much lower numbers of investment as well. We recently worked with an LGBTQ plus venue in London who raised just over £100,000, but that was from over 2,000 investors. And I think we've got a picture of that one. This is the Friends of the Joiners Arms community share issue. You see there, they raised £127,000 from 2,260 investors. So the average investment there really very low. The other thing that they did was they offered to people the opportunity to buy shares and to pay them forward. So for £50 you could pledge, and you got one share for yourself. The shares were £25, and you were buying someone a share. Buying a share for someone who wouldn't normally be able to afford to buy those shares. A really nice idea, and 500 of their investors actually did that. So they've got 500 shares in their business that they can award to people in the community who wouldn't normally be able to invest in their share offer. So really great. So they've got nearly 3,000 members, which obviously a lot of people to administrate, but really does show the value of what they're doing to their community. So I think that's the end of my slides. My slides. The end of my slides. And yeah, very happy to join the panel for questions.
Thank you very much, Jason. Well, we will, if you don't mind just stopping to share your screen, we will pass over now to Toyin for the final presentation from investors from Triodos.
Thank you, Olivia, and yeah, good afternoon to everyone. Thank you for being here this afternoon. So I'm Toyin Miller. I'm a Senior Relationship Manager from Triodos Bank UK. If you haven't heard of or don't know Triodos, we are a pan-European bank, social bank. We have been operating for about 40 years. We were established in the Netherlands originally, but operating in the UK for just over 25 years. So our head office is based in Bristol, but we cover the whole of the UK. So I operate in a team in London. My colleague Diana, who's going to speak shortly, operates from our Bristol head office, but we have an office in Edinburgh and also individuals dotted around the country. So Rosie, if you can just go on to the next slide for me, please. So I'll just tell you a little bit about us. So I work within our business banking, business lending department. And we as the slide said, we work with a number of organisations, and our focus really is on ensuring we work with organisations who are making a positive impact to the community, to the planet, and just generally to society as well. The images on the right of the slide, which can be shared afterwards, just give a summary of some of the sectors that we cover. I would say none of these sectors are mutually exclusive. So we do have some social enterprises who are focused on renewable energy as well, so they can overlap in ways, but this just gives you a summary. We are also a certified B Corporation, and we also work with a number of B Corps as well across the UK. So our finance, whilst we're pan-European, our finance that we provide in the UK is to organisations based in the UK only. We to date have provided loan finance of more than £1 billion. I think we're actually heading up towards 1.2, 1.3 billion through our business banking team. We typically provide loans starting from around 250,000 through to £1 million within our small loans team. So it's a dedicated team that is more hands-on and can support those smaller loan applications. In our wider team, we can go up to 20 million. In reality, I'd probably say for new borrowers, we'd probably be looking in the 1 to 10 million range initially, just to establish the lending relationship. But what that then does is provide the capacity that as your business grows, and hopefully that you want to continue working with Triodos, we can provide follow-on funding. And we've done that in the past with a number of our existing borrowers. So some organisations that we work with across the UK currently, some we all know of and will have heard of. So that includes sort of Neal's Yard, Riverford, the RSPB. We work with a number of YMCA organisations as well, both providing sort of housing and community services and projects. So the range is quite broad. I think for us, we pride ourselves on being established as teams who are sector agnostic, so you can speak to any of us and we should be able to sort of support you and not necessarily have to hand you on to somebody else. We also, having operated in the UK for as long as we have, we've got lots of sector experience, and we really pride ourselves on that and being able to sort of leverage the experience and knowledge of working with some of our earlier borrowers to support other sort of similar borrowers in the same sector as well. Our finance is offered both in terms of variable and fixed rates. We do provide finance on a secured basis, so we do typically require security. Predominantly and historically what that has been is in the form of property, but we can look at other forms of security as well. And as part of working with Triodos, you do have a dedicated relationship manager. So in terms of inquiries, you can go through to our website. There's an inquiry form that you can fill out. From that point, you're then approached by a relationship manager who will kind of engage with you and see you through the process. I think Tanya put in her slide sort of 3 to 4 months would be typical what the process is. I would say it's quite a difficult one to define. We typically are responsive to our borrowers, so we can usually try and work as quickly as you need us to, but I would say, yeah, at least maybe 2 to 3 months. And sometimes it can be longer than that just because of curveballs and things that can arise. We're an organisation who can operate with both for-profit and non-for-profit organisations. Kind of going back to the slide, it is really around understanding the impact that you're creating and what you're trying to do as part of the finance that you're looking to borrow. So once you have the introduction to a relationship manager, it will be a case of going through what we call due diligence, which really is a kind of a getting to know you process. So trying to understand you as an organisation, the people that sit behind the organisation, what your services are, and really what the finance that you're seeking is there to do. So we will look for things like sort of historic financial performance and financial forecasts as well. We'll also be very keen to understand sort of detail and any data you have underpinning sort of the impact that you've achieved to date and what you think the loan can help you to do. But we do that on a handheld basis. So it's a case of we will support you through that process, but it really is just to enable us to get to know you a lot better. So I'm going to stop there because my colleague Diana is now going to go through our other product offer at Triodos Bank.
Thank you, Toyin. Could we just move on to the next slide, please? Great, thank you. So my name's Diana Gary and I work in the corporate finance team at Triodos. In our team, we raise finance through our crowdfunding platform. So in terms of sectors, we work across exactly the same sectors which Toyin's just spoken to, so I won't go over that again. But the main difference is that we're raising the finance from external investors through the crowdfunding platform, rather than lending the bank's money. So we've got about 11,500 registered users signed up to our platform who want to invest in organisations that deliver impact and want to hear about our offers. And those are predominantly retail investors, but we also have a number of high net worth investors and also institutional investors as well. The finance we raise is typically debt through in the form of bonds. But we do also do share offers. Those are typically EIS share offers for kind of earlier stage organisations which deliver impact. And we're a smaller team within Triodos Bank. So there's 5 of us which work across the Bristol and the London team. So we're an advisory team. So because we're raising that investment for external investors, our service is around a kind of full project management service. We work with our clients to kind of look at financial modelling, to work out what debt capacity your organisation might have, and then to ultimately raise that finance for our clients. So it would be worth having a look at our crowdfunding platform. You can see the web address there on the slide. It's Triodos Crowdfunding, and you can see the kind of things that we, kind of organisations that we raise money for. In terms of the amounts that we raise, we can raise slightly smaller amounts than on the business lending side. So smallest would probably be 400,000, and we've raised up to 10 million. So we've been doing this crowdfunding for about 16 years now. We've been really successful at doing it. We've raised over 180 million in that time for over 50 different organisations. So that was it from me. If we just move on to the next slide, that's just got our contact details on it. And that's all. Thank you for listening.
That's great. Thank you very much, Toyin and Diana. Rosie, oh, we're back. Rosie, if you can just bring it back into the gallery view, I think, and then we can kick off with questions. So we've had a few questions coming in. I will start with those, but again, if you do have a question, please do raise your virtual hand or feel free to come off mute, and we will come to you. There's been quite a few questions coming in very much about legal structures. So are there, and this question goes out to all the investors. Jason, I know you mentioned kind of with regards to crowdfunding and community shares, there are some limitations to legal structures, but generally kind of with the types of finance that you offer, are there limits to who can apply based on which legal structures? And just to tie in another question that came kind of on a similar vein, are for-profit social enterprise or social purpose ventures welcomed into the social investment world? So I guess our organisations that are profit making, is there room for them also to receive social investment? And Jason, if I can come to you first of all for that.
So in terms of crowdfunding, rewards-based crowdfunding, no, anybody can use it. Our funding partners will have criteria for who they can support. Most of our funding partners tend not to support private for-profit businesses, but they will support social enterprises. And like I say, for community shares, there are specific legal structures. You need to be either a cooperative or a community benefit society.
Great. And Tanya, if I can ask you the same question.
Yeah, so for the Growth Impact Fund, are there limits to who can apply based on legal structures? We're open to all legal structures. So as long as you're a registered charity or a business, you can apply for the Growth Impact Fund. The thing I would say is that debt and the revenue partnership agreement specifically are open to all structures, but the equity investment, that one is primarily for community interest companies that are limited by shares or companies limited by shares. So that's the equity one is the one that has slightly different ones. But if you're looking for debt or if you're looking for a revenue partnership agreement, those are open to any registered business or charity in the UK.
And Toyin or Dan, I'm not sure who prefers to take that question from Triodos. Well, Toyin, you've come off mute. So.
Yeah, so Triodos can work with for-profit organisations as well as non-for-profit, and so similar to Unlimited, we can explore a number of legal structures as well. We are a bank, so we're FCA regulated, so for us it's a case of being able to sort of take our borrowers through sort of know your customer and anti-money laundering processes, which really just means we need to understand the legal structure and any investment or funds that underpin that and the source of funds. So that's one side of it, and sort of additional checks that are required as part of working with Triodos Bank or any bank in the UK. But yes, we can do for and non-for-profit organisations.
Great, thank you. And one of the questions that came in, actually a few questions that came in kind of pre-event were a little bit around where Annie touched on in that sort of scale where social investors tend to sit on a scale where kind of on one side we've got the financial returns and on the other side we've got kind of the impact returns. And I guess kind of my question then would be of how can you go about kind of finding an investor that is very much mission aligned, and particularly for smaller organizations where they're kind of maybe less in terms of the financial return. How important is that social return to the social investor? So I'll go this time to Tanya first of all.
Yeah, so for the Growth Impact Fund, it's really important for us, like what I mentioned in the beginning about being able to tackle inequality. So if your venture is looking to tackle inequality and are doing things towards that, that's the impact model. But at the same time, making sure that the business model is actually, the ideal would be that those are in lockstep, that you are growing both things at the same time. And as you grow the business, you're also growing the impact. And so being able to find a funder or investor that has those same values, I think it does take a bit of time to do your research. And I know it's a tough process to look through all the many different types of investors you can find. But I think approaching the investment process holistically, it's really important to understand where the shared values are and where they aren't, and be able to say that, investor brings multiple things to the table, not just being able to give you the financial investment, but they also bring other values. So being able to provide that support, which ones are part of a network, part of a community, that have specific values in mind. So for us, it's really important to see, the impact model and the business model working together. And when investees are looking at our fund, being able to look at the journey that we'll be on in an investment relationship. So when you're looking at trying to find an investor that matches your needs, being able to do a bit of research to understand, the origins of those funds, the goals, long-term goals of those funds. And I think going back to shared values and making sure that as you're screening potential places that you'd like to apply to, that you're taking that into consideration and not just looking at the financial piece, but seeing what else can be brought to the table. And also that there's a lot of immense value that investors can bring beyond the financial investment, that they bring other parts to the table when they're investing in you. And it is a process, and it is a relationship that you'll be on. So I would advise taking a lot of time in that part, really understanding what matters to you as an entrepreneur, to you and your venture as a whole, and the impact you're creating, and being confident in that and bringing that to the discussions with potential investors and applying for funding.
Thanks, Tanya. And the same question, Toyin, to yourself.
Yeah, so I would agree with everything Tanya said, really. It really is about building a relationship, the lending relationship, and creating the right foundations. So it's really funny, at Triodos we often talk about sort of finding someone who's got the right sort of fit, the social fit and understanding, because we cover such a broad number of sectors, and we're dedicated both in terms of the social but also the environmental as well. It's trying to ensure and understand for any organisation looking to borrow money from us that they align with our values as an organisation, and just ensuring that as we start the process, and sort of some of these things unravel as discussions go on, but there's clarity and consistency in terms of the impact that the organisation may have achieved already, but also how our finance is helping that to grow and helping to sort of expand their services. So it can be tricky because we work with non-for-profits. We often see a number of organisations who, it's not necessarily that they're doing anything wrong, it's just that I suppose what we'd call the social, the environmental impact isn't quite there, or it can't be articulated to us quite clearly. And so we have walked away from those discussions and those processes. So really, I suppose, trying to get to a stage where you can articulate your impact and the difference that it's making is such a key part of it. It makes it easier as part of the conversations that you'll be having with prospective lenders or investors as well. And it just means that actually the story of what you've achieved already and what you're trying to do just becomes a lot clearer, and really ensures hopefully that all parties don't kind of take a misstep or feel like they've sort of lost time in the discussions that they're having. But for us, the impact is a key part of it, in the same way that we will assess in due diligence your financial performance, or your forecast will also assess and try and understand the impact side of it as well.
Thanks, Troy. And just on that point, when you're communicating impact, it can sometimes be quite difficult because, you know, a lot of the time impact is very much kind of about people, not numbers. So it can be hard to kind of get that on a page. What advice would you give to organisations who are maybe unsure of where to start or how they can effectively communicate impact to an investor?
I always say to organisations, start with where you are. It's within, you know, your organisation, hopefully, but you definitely know your organisation better than a lender will. So start with where you are in terms of your journey and kind of what you have done today, or what's your core purpose and the value. What's the thing that you're really passionate about? I mean, there'll be some large organizations who have the capacity and ability to create their impact reports and get the data down on paper, but actually I think sometimes just being able to talk to what you do as an organization can be just as powerful. So you know, in time you may want to go down having a report and being able to articulate that to sort of your supporters, the beneficiaries that you help, the communities that you serve. But I think when you approach sort of lending organisations, start from where you are. Kind of, I suppose, where I'm talking about articulating your story and what you've done, that's kind of part of it. Sort of bring to the forefront that impact story. Who is the individual or the community or the kind of perhaps the environmental beneficiary that you're looking to serve? How or what have you done already, and how is the finance that you're asking for going to enable that to grow? I guess those are the three key things that I would address, and I think from there conversations can flow, and hopefully the understanding on both sides can start to flourish.
Thanks, Troy. Just to flag as well in relation to this, there is a tool on the Good Finance website called the Outcomes Matrix, which does enable you to put in some information about your organisation and the change that you're making. And it's quite a helpful tool if you are kind of looking for a way to kind of quantify your impact and be able to then present that. We've had a lot of questions coming in about early stage organisations who maybe haven't got that, who haven't been able to demonstrate kind of that trading income over a long period of time. And I guess my question around that is, where do you start with social investment if you are an early stage organisation, and what kind of wraparound support in terms of, and this also links in to one of the questions coming in the chat about what support or guidance around kind of business planning or non-financial support is available. So Jason, I'm going to put the question to you first of all.
So I guess in terms of early stage, then, you know, crowdfunding, running a rewards-based crowdfunding campaign can be a really great way of doing, we said, demonstrating support for your business, for your charity, particularly if you're planning on doing something new, or you're looking to expand, you want to create a new service, you know, take on a new building, whatever that might be. Then crowdfunding can be a really great way of getting your community, getting your supporters involved, and demonstrating the demand for what you're doing to potential other investors. In terms of support for people at early stage, we provide some support to people to help them crowdfund. We run regular webinar sessions, we have weekly drop-in sessions, but we wouldn't go into the detail of you know, helping with business plans, etc. We are a Reach Fund access point, so you can get access to a Reach Fund grant, which can provide support for investment readiness and someone to work with you on that kind of, you know, business planning, marketing, whatever it is you might need to get you to the point of taking on investment. So that's a really good resource, but you'd need to identify your kind of advisors to work with. I know Good Finance has just launched a new section, hasn't it, recently on pre-investment support, so that'd be a great starting point. When it comes to community shares, we work with the community shares company, who can advise on setting up a share issue and the process you need to go through in terms of documentation and helping put together things like the share offer document, etc. But that's, that there would be a charge for that. It's in effect a piece of consultancy that you would probably need someone to help you with that expertise and secure the funding for that bit of work.
Great, thank you, Jason. And Tanya, I know with the Growth Impact Fund, there's the pre-investment support. What exactly does that involve? And how do you kind of help organizations kind of with that business planning, or what support do you give?
Yeah, sure. So with the Growth Impact Fund, we do have pre-investment support. And I know someone in the chat asked if that also takes 3 to 4 months, and the answer for that would be yes, because you go through the same process that you would if you were just expressing interest in the fund itself. So to apply for pre-investment support, you do need to be eligible for the Growth Impact Fund itself. And when you go through pre-investment support, I think it's really special because it comes as a grant, and it really helps ventures that are wanting to be investment ready or almost investment ready, but there are specific pieces that are missing. So if you are looking to get more clarity on your financial model, a bit of support on your business plan, those are some things that can be addressed. There isn't a set way that we do the support plan because it is customized to the entrepreneur that we're working with or the venture that we're working with. And before being given a support plan, there is a bit of a diagnostic, a conversation that we have, understanding what your investment aims are and whether the fund would be a good fit for that. So it is called the Technical Assistance Fund. But it also includes other things. So if you're a carer and you need support with getting paid care support, so that you can spend some time on your business, that can be accessed as well. If you're trying to fill in, if you're a freelancer and you're going to lose time working on other projects to be able to work on this venture, that can be booked into the grant, the specific grant or the use of the grant. So it's quite flexible in that way, and being able to meet entrepreneurs where they are to help sort of bridge the steps towards that gap, filling that gap of being investment ready. And I think what's really wonderful about it is it meets entrepreneurs where they are, and we can co-create that support plan and understand if it actually aligns with the goals that you have. And different ventures will be at different positions, but the aim is to help you become more investment ready. If you are a bit more early stage, so you haven't don't have much traction, if you're still just thinking through ideas here and thinking about a project or an enterprise that you want to start, Unlimited does have its own early stage grants for entrepreneurs. And so I would also point towards that, because sometimes you might not be quite ready to apply for the Growth Impact Fund. It might be something farther into the future. But there are grants for early stage entrepreneurs, and that starts at about between 8 to 18,000, depending on how mature your business is or how early you are starting. So there are a few options. And I think these are really important questions to ask, because you might find that you're looking in one space for the type of investment or funding you need, but actually you might be a few steps ahead or in a different area of the work. So I would encourage you to look at that as well.
Thanks, Tanya. And just on that, we had a question that came in prior to the event on kind of when is the best time to look for social investment. So I'm going to open that up to any of the investors who would like to answer it. But at what stage should you really be kind of considering social investment? And just to flag as well, if anyone in the room has any questions, please do feel free to raise your hand or just come off mute and ask them.
Shall I go? Yeah. So I think from my point of view, or from our point of view, that the earlier the better. Really, I think we often get approaches from organisations that have put these forecasts together and have this plan and kind of like ready to go, and actually perhaps not recognising that it does take a bit of time. I mean, most of the clients that we work with and raise finance through the crowdfunding platform for, I would say it typically takes between 4 and 6 months. So from our point of view, I'd say that's the kind of timeline in terms of like looking ahead as to when you're going to get that finance actually in the bank, ready to you know, ready to spend. That's the kind of time frame. But I think, you know, the more planning you can do, the better. So I think, you know, the earlier the better, really, albeit, you know, there needs to be, I think, something kind of meaningful bit to be able to share with a potential investor at that point in terms of what is the growth plan and some kind of thinking around the forecasting and the amount that you need and what it's to be spent on, etc.
Thanks, Dana. And there was a question in the chat that came in earlier about borrowing money. And is it better when you're borrowing, is it better to ask for all the money kind of upfront in phase one, or kind of ask for money in different kind of phases? Which is kind of most, I guess, most appealing to a social investor, and which are you most likely to kind of pay out on?
Yeah. Again, this might differ for different investors, but from our point of view, I think I would say generally, I mean, it will depend on the situation, but I think generally it's probably better as far as possible to do it kind of in one go, because otherwise it can become, it's quite time consuming and can be quite expensive for an organisation to raise finance. So it can be, you know, it takes up a lot of the management time. So and actually it's not like there's a direct correlation between that time you're spending and how much you're going to raise. So for us, if we're preparing something to go onto the crowdfunding platform, whether we're raising $500,000 or $1 million, the amount of management time that's required is the same. And so actually, if you actually think you need that larger amount, you're better off probably going for that in the first instance. My caveat to that would just be that obviously where you're talking about debt, once you've raised that debt, it is kind of burning a hole in your pocket in terms of you're paying interest on it. So, you know, you don't necessarily want to be raising money that isn't going to be spent for like 3 years down the line, because that's going to become quite expensive. So it's just kind of balancing those two things. Whereas where you're talking about equity, and actually I've kind of got having a live conversation with a client that we've worked with at the moment on this, where if you're raising equity, because you're not necessarily having to service that equity through interest, I think you're much better off kind of raising as much as you might think you might need in the next kind of like 2 to 3 years, because you're not having to pay interest on it, and it's very time consuming to do, you know, a share offer. And you know, we've worked with an organisation a couple of years ago with doing an EIS share offer, and then they've come back kind of 2 years later and they've spent that money more quickly than they would have thought. And now we're looking at going through the process again, which is quite time consuming and expensive for them, whether actually maybe they would have been better off raising more first time round. So yeah, it's a balance, and I think it does depend on the unique situation. But I think, yeah, it is, like I said, it is quite a kind of time consuming and expensive process. So if you can limit that to doing it once, then perhaps it's better in many of the circumstances.
You used a phrase earlier, Diana, debt capacity. What do you mean by that?
So debt capacity, literally how much debt might an organisation be able to take on based on its cash flows. So, you know, for us, one of the first things we'd be looking at when we were looking at working with a potential client would be what's your projected income and what's your projected profit, and based on that, how much debt can you service, how much free cash is your organisation generating to enable it to service debt, and that is debt capacity. And that's something that we're, you know, that's like we're very familiar with doing. With one of the first things we would look at with an organisation to say, how much debt can you comfortably service?
Yeah, because I think sometimes we hear the word debt and we kind of go, oh, I don't want to be in debt. But I guess it's kind of that awareness that debt is not necessarily a bad thing. In one of the events we ran recently, we had a speaker, Carl from 2 to 3 Degrees, who mentioned kind of about debt, that debt is not a bad thing. It's just that bad debt is bad. So essentially it's, I guess, knowing about how much you can feasibly repay, and kind of not biting off more than you can chew. And I guess kind of that comes to 2 questions that come out of this. And first of all, it's what happens if you can't repay the debt. You know, those things that happen. No, but none of us saw the pandemic coming. None of us kind of could have predicted the cost of living crisis, which is coming. And we know that frontline organisations are going to struggle through this. But what happens How can social investors help, and what happens if you can't repay your debt?
So it happens, as you say, there's lots of curveballs that can arise. So I'd say the first part of it is as part of any initial loan application. Definitely for Triodos, and I imagine it'll be the same for a lot of other debt providers, they will be looking at sort of the debt capacity that we talk about, but they will do what we call stress testing. So if we put some stress scenarios in that situation, so your costs, for example, are 20% higher, or your income falls by 25%, what does that do to that debt capacity and that comfort around an organisation being able to repay the debt? I would say that no organisation or no lender wants to be in a scenario that they provide a loan that ends up being a bit of a millstone around an organisation. When we recognise the impact, we definitely want to support it and not create sort of further pressures or stresses as a result of it. So I guess from the outset, a key task is really kind of stress testing and understanding what might happen. Now, nobody foresaw the pandemic, so you still have scenarios and curveballs that arise like that. I think for Triodos, we always say with organisations in those scenarios, please, open dialogue is so important. So please do speak to us, always speak to your lender, and have a discussion with us. For our customers who were more severely impacted as a result of the pandemic, for example, we were able to give them some of them capital repayment holidays. So we were able to sort of over a period of time just stop the capital repayments that were required. They still paid interest, which tended to be a smaller part of the repayment profile. So there was still some repayment, but it alleviated the full pressure of the full sort of repayments that were due for the loans that they had. And for a lot of them, it gave them the breathing space to sort of see through, you know, that initial first 3 to 6 months post sort of March 2020, when no one really knew what was happening. And it just also allowed us as a lender to try and get our hands around and understand the specific impact to that borrower and try and support them through the process as well. So yeah, things always happen. Things, no matter how anyone plans for a loan or a project to sort of go in a certain way, there will always be things that change. And in those scenarios, I always recommend, and I say this to all of my customers, please do speak to us. And I would say the same to everyone on the call as well.
Yeah, thanks, Troyan. And I think that's from the frontline organisations that we speak to, that's something that we hear a lot. And I guess one of the key differences between a social investor and kind of a more commercial investor is that social investors do really want to help your organisation. They want to see you succeed. They're probably not going to lend to you if they don't think that your business proposal or you can viably repay a loan. But at the same time, I know one of the investors who came on a similar meeting before said, we're not going to come and take the TV off the wall. You know, we will look at kind of helping you and supporting you in whatever way, but kind of keeping those lines of communication open is really, really key. There's another question come through in the chat.
Sorry, Olivia, could I speak to that?
Yeah, of course you can, Tanya, go ahead.
Yeah, I think, you know, just like what Toyin said, the relationship with the investor is so important, and being able to have that communication and that trust. And so even before something happens in the future, I think the foundation of building that trust and that communication is so important. And you see when the actual stress comes in the future and the tension comes in the future, that when you've got that good foundation, you're able to work through it. And I think that's something that doesn't always get planned for by people looking for investment, but that's when the shared values are so important, because you'll see those come to life when you're going through a really challenging period. Yeah, I know that Unlimited works to be very responsive to what is happening at the social entrepreneur level, really understanding what's going on and checking in. And so when things like cost of living crisis started to come out, be able to reach out to entrepreneurs and say, what are you thinking about this? How are you feeling? What's happening? And so keeping those lines of communication open, even when we feel, or when you might feel that there's nothing specifically relevant yet, but actually being sort of moving in line with what's happening. And in some cases, it's about reaching out before you even know that there's an issue. I think a lot of the times people want to reach out when they know that there's a problem, that they can articulate it. But we try and encourage people to share it even when they're just starting to see what the responses or the impact be on your own businesses, but even on your own personal life. So we've had cases with entrepreneurs where there just have been such unforeseen circumstances, and Unlimited really does, hold a commitment to the entrepreneur. And so being able to provide, we can't provide every single option, right? But it is important to sort of lay all the pieces on the line and understand, what does it look like to you, even as an individual? What are the impacts of COVID-19? What are the impacts on your own mental health, or your streams of income, or things that may not be just about the business, but impact the business because you're the one leading it. So there have been restructures similar to what Toyin had shared, but and these are not ideal, but in some extreme circumstances, we really hold to that commitment that we've made with a social entrepreneur to be able to support them. So I think just to say that communicating and being honest with your investors and your funders, and starting the conversations early on, as early as possible, those will really bear good fruit for you down the line.
Great, thank you, Tanya. Jason, is there anything you would want to add to that?
Well, crowdfunding community shares means that your money is coming from the public, from people who've invested or paid for rewards, or just donated money to what you're doing. So it comes back to that point, you need to keep your supporters, your investors updated on what's happening. Have an ongoing dialogue with them. Hopefully they will be on your side. They've given you money because they like what you're doing. And for community shares, the interest payments are dependent on the ability of the organisation to pay. So when somebody runs a community share issue and an organisation runs a share issue, they'll set out a target return. It's usually between 1% and 3% per annum of the amount invested. However, that is dependent on the ability of the organisation to pay. If takings aren't good in one particular year and there isn't the money to pay back interest, then you need to let shareholders know and tell them the organisation is not in a position to pay this year. So they are flexible, and it comes back to the point of community shares. The main reason for people investing through community shares shouldn't be about the financial return. It is about the social return.
And the question in the chat, has COVID or the current inflation crisis had an impact on the social investors' capacity for risk? And I guess, Jason, obviously with crowdfunding, it's kind of people in communities. Do you think kind of people having, I guess, less of a disposable income, and do you think that will impact community shares?
Yeah, possibly. Yeah, people will have less disposable income. Although we do know when people invest in community shares, they're probably taking money from kind of what would have been savings rather than just disposable income that they've got on a monthly basis. But possibly with the cost of living crisis, people are going to be less likely to want to dip into their savings to invest in other things, because they'll be worried about keeping that money for a rainy day, and particularly if the recession gets quite bad and we see lots of people losing their jobs. So yeah, I do think it will have an impact. We're yet to see how big that impact is likely to be, I think.
And Tanya, same question to you. Is it likely to impact investors' risk appetite?
I think one thing that came to mind is, for the Growth Impact Fund, it being, a new fund that is just about to be launched, that in some ways it's shaping, maybe not the capacity for risk exactly, but really shaping the environment that we're in, how entrepreneurs feel about their businesses and their own understanding of what are the ups and downs that could happen in the future. And so I think maybe not speaking to the impact on the capacity of risk specifically, but actually the impact of COVID on how the fund is looking at what are the ups and downs, what are the things that can happen, what are the extremes that can happen, what are the negative cases, and none of the things that happen are happening just by itself, right? It's not like, oh, COVID as one thing that we're responding to, but there's so many layers to what's happening with ventures and businesses and the political climate around us. And so understanding that whatever challenges ventures face, they're actually layered upon each other. There's not just one specific piece. And I think, at least for ventures in my own portfolio, we were talking a lot about what is the impact of cost of living. And so being able to look back on the past years, a lot of ventures are currently reporting on the previous year or the previous months, and people are still referring to, you know, last Christmas, if you're a hospitality business, of just how that impacted their own operations and their own ability to get back on their feet. So I think as a organization, we try to be very responsive and forward-looking to see, you know, what are the challenges that are going to be faced by social entrepreneurs and social ventures. And because we're committed to journeying with them, I would hope that we would be able to account for those changes. And that's just speaking for myself, be able to account for those changes and to support social entrepreneurs, whatever the external climate may be.
Thanks, Tanya. I'm just conscious of time, so if anyone does have any final questions, just if you raise your hand now, or otherwise, if there's any questions that were submitted beforehand that we haven't managed to get around, we will share these with the investors, and any kind of final comments or anything they have, we will make sure to circulate their responses. Just before we go, I'm just going to go around to the social investors one final time. I just have, in a quick kind of one sentence, what advice would you give to a social entrepreneur or social enterprise at the moment who is looking for finance or looking, kind of exploring social investment, whether it's for the immediate within the next couple of months or further down the line? What advice would you give to them? I'll go to Trade-offs first of all.
So I would say definitely lay the foundations of what you're sort of seeking in terms of investment. So as you have said, the Good Finance website is a great place to start in terms of all the resources that are on there, but you as an organization sort of have, hopefully off the back of today's call, have some thoughts and some ideas around kind of what you're presenting and what you're seeking finance for. Whilst you don't need to come sort of perfectly ready to go, I think having an element of those things in terms of the finance ask, the background, who your impact and your financial performance and forecast as well is really helpful. And it just means that conversations can proceed at pace, and hopefully both parties can get the most out of it. So yeah, I suppose I'd say start by sort of laying the foundations, really thinking about what it is that you're asking for and how you want to articulate that ask as well.
Thanks, Ryan. And Jason, I'll come to you next.
So one thing we encourage everyone to do when they crowdfund is to, before they go public with their campaign, to speak to people about it, whether it's friends, family, colleagues, etc., and say, look, we're going to be crowdfunding, preferably have your page drafted and ready. We're looking to raise money. Will you have a look at it? Would you pledge? How much would you pledge? Does it make sense? I think often people are so close to their organization and the work that they do that they struggle to articulate that in a way that the public can understand. And when it comes to investment, it's a similar kind of thing. You need to be presenting your information in a way that an investor understands. So I would say if you're looking for investment, whether it's through crowdfunding is going out to the public, start to ask people whether they would support your campaign. Or if you're looking to go for perhaps debt or equity, start speaking to people who have good financial background and explain what you do, what the business model is, how much you're looking to raise, and ask them if it stacks up. Get feedback from lots of people.
Thanks, Jason. And just finally, Tanya, coming to you quickly.
Yeah, just remember that this is part of a long journey for you as an entrepreneur. So if you can look at it holistically, really important. Don't be disheartened by no's. I don't think we talked so much about rejection today, but don't be disheartened by those no's, because that can help you find the match and actually affirm or show you what your values are as a business. So remember those values, and remember that you want people that have those shared values on the journey with you.
Yeah, I think that's really true, Tanya. No doesn't always mean no, full stop. It can be no, right, not right now. And a lot of social investors will look to support you in other ways, whether that is kind of business development or business support, but it is kind of, I guess, fostering that relationship and finding that social investor whose vision very much aligns with the impact that you're trying to make in your organization's mission. I'm conscious that we've run slightly over time, so I won't keep you any longer. Before we go, I know Cecilia is going to pop a link in the chat just for some feedback on the session. If you have a couple of minutes just to fill that out, it's really helpful for us. It helps us kind of understand what content is most useful for you and really shape our future events. So we'd be really grateful for that. We will also follow up by tomorrow with any kind of links or any of the resources. And if our social investors are happy, we will share any contact details for them, any slides or anything like that to follow up post-event. As well, kind of any links to the Good Finance website. We mentioned earlier about the pre-investment page where we've tried to signpost as much as possible to information about legal structures, grant funding, and different kind of websites that maybe Good Finance doesn't specifically deal with, but hopefully we can help support you on. And if you do have any questions or anything, please do feel free to follow up with myself or another member of the Good Finance team. But thank you very much, everyone, for joining. Thank you so much for our speakers today, Toy and Diana, Tanya and Jason, and thank you to Hatch for being such great partners on this event. And thank you very much, everyone, for your time and for coming along today, and have a great rest of your day. Take care. Bye.
Thanks. Bye-bye.
Thanks. Bye.